Hello everyone, this is Matthew Fraley, founder of BreakpointTrades.com. Today was a Fed day, and it is July 30th, 2025. So we're going to do an in-depth review of the markets. The last video I did was on Monday, but first, anyway, that was some funky AI video animation software I was trying. Anyway, this is our backend recorder for our website subscription service. I'm going to go ahead and start this recording now. A lot to talk about tonight. Hello everyone, this is Matthew Fraley with BreakpointTrades.com. This is the Wednesday, July 30th newsletter. Tonight's newsletter, as you can see, divided into 8 major sections. Quite a few things to discuss today. Anyway, as you know, today was an FOMC day. We talked about this being a monster news week, and so far it has been. So today was the FOMC. Obviously the Fed didn't move rates. They kept them in the same spot. And there was a couple different things here. We had 2 Fed governors who actually dissented. So that's the first time in a long time that has happened. And otherwise, the market did pull back today nicely. We've been expecting a little pullback from the market. But as you know, there's been no break of trends or anything. And so while we had a pullback today in the market, we had big cap tech earnings after hours. Amazon, Meta, and Microsoft. And guys, they blew it out of the water. So Meta and Microsoft are up 10% after hours. Microsoft now tops $4 trillion market cap, and it joins NVIDIA. And I talked to some folks about this, made some comments. Honestly, if you look back over the last 15 years, 8 to 9 times out of 10, these major big cap tech stocks like this beat earnings or gap up. It just is what it is. Now, standard stocks that are reporting earnings, it's a total crapshoot. But honestly, if you're a betting man, and most of us are, we trade stocks, we're traders, most of the time you could go long into earnings on these big cap tech stocks. It just is what it is. Yeah, there's been a few times here and there where, they gap down, but most of the time they do well. All right, so the effect here after hours is futures are up quite nicely. ES futures are up about 50 points. And what we had today, Steve Nelson talked about it last night in his newsletter to watch for it. And we posted it today. We simply had a 3-wave pullback into a support zone where we bounced right off of. So again, until we break structure, until we break some sort of uptrend, the trend remains up. GDP today, that was one of the news items that came out. It came out at 3% growth. So economy is doing quite well. A lot of folks have been worried about that this year, just with Trump's actions. But man, things are humming. And we do have a lot of major investment coming into this country longer term that could be a real benefit down the road. A lot of these, Trump has managed to secure billions and trillions of dollars, or at least promises to invest in the country. So that could reap benefits longer term. Obviously, that has to come. That has nothing to do with right now. And we'll just have to see now how far this market goes. We talked about that, this week, wouldn't be surprised if the market holds up. Now we'll see what happens next week following all these news items. But again, market needs to break some sort of structure here. The market definitely has climbed one of the biggest wall of worries in a long time, I think, since the April 7th lows. Another thing, guys, I talked about the dollar. I called a major bottom in the dollar a week or 2 weeks ago, and that's so far been the case. Another big rally today in the dollar, and gold is selling off. Remember, been showing gold in this symmetrical triangle pattern, and usually technically that'll favor an upside break, but I've been more favoring a bear trap and break to the downside, and that looks like that may be occurring. That spike to $3,500 on gold at that highs, I think that's going to hold for a while. Okay, and some other news items, like I said, we have the jobs report on Friday. That's another big one. And a couple things I'm going to follow up with are the stats on the consecutive number of days above the 20-day moving average. So I did some additional work on that, but let's go ahead and look at the first item. So the first chart item below, item number 2, here's a 30-minute chart of the S&P 500, just keeping it really simple. So again, as you know, we've been uptrending, and you can see we simply had a 3-wave pullback, ABC, into the support zone and bounced off of it. Now tonight, futures are up basically near the highs. It doesn't mean they won't reverse overnight somewhat. Sometimes you can get the opposite reaction after the Fed, but it would also shock me if we made another high here, because we've simply had a 3-wave pullback structure into support. Next, let's follow up on these exhaustion statistics I've been talking about. We really are in an interesting time. Like I said, markets had a heck of a rally, wall of worry since the April 7th lows. So, talked about it. These stats have been sort of in the news. The number of consecutive days the S&P and NASDAQ have been trading above their 20-day moving average. Again, I don't like to take articles at face. I like to test it. So over here on the right, this is the S&P 500 daily, the thick blue moving average, cyan moving average, that's your 20-day. And so we've been above this now 66 consecutive days. Now, how long, historical is something like that? How many times has something like that have been achieved? So I back tested that to 1970, essentially 55 years. And you can see right here in the shaded area, that's the current, right? So that has occurred, let's see. That's occurred, once in 55 years. That said, the longest streak, because this is the second longest streak in 55 years, the longest streak was actually back at 76 consecutive times above the 20-day moving average, and that was August 1997. So again, this is not the longest streak. So, it could end any time here, or we could end up matching that streak, or end up exceeding it. All right, that's how stats go, but just doing a follow-up on that. Next, back to the newsletter at hand, the general market. So item number 4 shows the index sector table, what transpired today. And you can see today was a down day for the Dow, S&P, and Russell, while the NASDAQ was slightly up. But like I said, after hours with those earnings, futures are up quite nicely. NASDAQ futures are up about 250 points. ES futures are up about 50 points. Again, we'll see where they open at tomorrow. And as far as the market sectors, there is quite a bit of weakness here. Transport's down 3%. Banks and financials down a little bit. Energy down today. A lot of red sectors here. So there is weakness under the surface. And, like these big cap tech stocks like Microsoft and Nvidia and Amazon, there's such large weightings components that, they're really what's doing well. And there's a lot of things under the surface that aren't. So eventually that will lead to some sort of correction here. And with that, historic run we've had so far with consecutive days above the 20-day moving average. That has yet to break. But, this is the second long stretch. Currencies, US dollar up almost basically 1% today. That's a big day. It's up 2.4% for the week. Cryptocurrencies, they're slightly down here. They've been struggling a little bit, mainly going sideways here. Commodities, mostly to the downside here. DBC down 0.2%. Now, crude oil had a 1.5% gain, but the problem is all these other commodities were down. Look at copper down 19% today. That's a freaking heck of a drop. Down 21% this week. Again, on the cusp of that big dollar rally. Natural gas down 4%, weakness in all the ags. Precious metals obviously got hit hard. Gold down 1.75%. Silver down 3.3%. GDX, the gold miners, down 2.75%. Look at the losses for the week. Also, big pullbacks for platinum and palladium. I'll be talking about that tonight too. As far as the bond market, we did see a bounce in the 10-year, 30-year Treasury yield, but overall, the 10-year is essentially in a coil pattern that I've been showing. And finally, item number 5 is the economic news calendar. Again, we've had a lot of earnings, FOMC, GDP today, Tomorrow, the 31st, we have initial jobless claims, PCE, PCE core, Chicago PMI. So there's a couple more important items. And of course, Friday is the non-farm job payroll report. Also, I think Apple reports tomorrow. Next, image number 6. Here's the chart with the image with the earnings. So tomorrow we have Apple, Amazon. Okay, and you can see all these other big names, Coinbase as well, Roku, Reddit, CVS, a lot of stuff on here. All right, let's go and jump to the charts. First chart below, item number 7. Here is Meta. They reported today, again, up about 10% after hours. They closed at $6.95, and in after hours, they're trading way up here at $7.76. So a new high. So this pattern kind of had a flag look to it, didn't it? Kind of a cup and handle. Well, in after hours, it's playing out as price is clearly broken out to a new high. Next, image number 8. Here is Microsoft. As you know, it's just been drifting higher, ever higher. And in after hours, it is at 558. So it is going to potentially have a big gap up tomorrow as well. Next, chart number 9. Here is Amazon. Let me just check on something, guys. So Amazon also up after hours. This reports tomorrow, though, after the bell. And chart number 10, here is Apple. Now, Apple's been weak here, and this is going to be an interesting one. Apple's behind in a lot of various things, such as AI and other things. So I'm wondering if Apple may not beat. So anyway, that's tomorrow. All right, back to the indexes. So item number 11, here's the chart with the 5 key major index. Again, you can see the slight pullback today. Things are up after hours. The Dow recently pulled back from its all-time highs. It did not make a new high like the other indexes. I think that's only a matter of time, obviously. The S&P, NASDAQ, still holding their 9 EMA. Bollinger Band starting to pinch here on IWM small caps. Next, moving on to the S&P 500 chart. So chart number 12, here's the KISS systems. So the SPY is at the top. No changes here. Smart trailing stop still has yet to move up on this one. And at the bottom is the S&P 500 high performance KISS system with these mean reversion longs. No changes on the smart trailing stop. Smart trailing stop still up here around 62.73. Apologize, it looks like that got moved up on me. This is a static image, so I can't move it. But otherwise, you can see these beautiful 4 mean reversion trades inside the main long trend from late April there. So just amazing stuff. Those are something I'd like to eventually bring to the website in the form of trade notifications. Maybe add them to the SPY and ES systems. Next, image number 13. So here's the 4 time frames. Nothing changed here. We're still holding all these ATRs, average true range indicators, on a closing basis. You can see on the 78-minute we did go below it, but still managed to close right at it. All right, back to the standard chart. So chart number 14, here's the daily S&P 500 chart. Again, you can see a little 2-day pullback, still holding that 9 EMA. Again, now we'll see if we make another high tomorrow with futures or not. Otherwise, this provides this updated wave count. We've been showing this nested 1, 2, 1, 2 from the April 7th lows. And again, we're still kind of working on this wave 3 of 5. So if we make another high here, it's still wave 3 of 5. Eventually, though, this will, I know you don't think it will, but eventually it's going to end. When it does end, then we're looking for one of these wave 4 pullbacks. And they could be quite deep. They could at least test this previous breakpoint, which is around 61.50. That'd be a pretty nice pullback point-wise, or even this demand zone down here, or one of these. But then that should be yet another buying opportunity, as I'd expect another rally to new highs in a wave 5. But again, we're still technically in this 3 of 5. Next, chart number 15. Here's the other zoomed in chart I've been showing for a while. Honestly, I meant to remove this little channel. We slightly broke it. But again, we're still holding that 9 EMA. And we'll see if we make another high tomorrow. Next, Chart 16, here's a half-day chart. Again, we just continue to stair step, higher low, higher low, higher low. That's what these dotted lines represent. And that's similar to how the KISS systems work. They're moving those smart trailing stops up in a similar fashion. But we have yet to break any structure or previous higher lows. And chart 17, here's a 30-minute chart with some fibs. So you can see from the fibs from that last higher low, we essentially bounced near the 61.8 fib. And again, after hours, we're up near these highs. Again, we'll see how if futures stay this elevated by the morning or not. And chart 18, here's that other 30-minute chart I showed first thing with that simple ABC three-wave pullback that tested the support today. It was actually a good area to take a long and obviously hold that long into after hours with those big cap tech earnings. Next, chart 19, here's the triple Qs NASDAQ high performance KISS system. Again, no changes here. Smart trailing stop is 548.70. We had a DeMark 13 yesterday and a little doji today. It obviously triple Qs are up here after hours with those earnings. Again, beautiful example of a combination of the KISS trend following and mean reversion. You can see mean reversion, or the KISS system went long here on April 7th, then had its initial smart trailing stop, moved it up along the way, and in between that you had three beautiful mean reversion long trades. And you can see some examples back here. Again, not everything's perfect. You can see back in January, this system would have went long, then stopped out there quickly. Took another long there in early February, stopped out. But again, system does its job. It keeps you protected. But I really like the added benefit of these mean reversion systems inside the KISS trend. So again, not yet sharing these in real time with the website, but that would be my eventual goal. Next, image number 20. Here's the 4 time frames. Again, just like on the S&P cash, still holding these various ATRs on all these time frames from the daily, half day, all the way down to the 78-minute. Next, back to the standard chart. So chart number 21, here's the daily NASDAQ triple Qs. Again, little doji today. Still holding that 9 EMA, which we've been holding. On a next correction, here's your first demand zone, and then you got your bigger supports down here. We have yet to lose any supports even short term. Next, chart 22, here's a 2-hour chart. Again, just continue forming higher highs, higher lows. And chart 23, here's a 15-minute chart. Again, just like on the S&P, had a 3-wave pullback. And then we bounced late in the day, and we're up after hours. Like I said, guys, we had a lot of news this week. We still have a lot of news coming. But after this week, we really don't have a bunch of news. Earnings wind way down. And we start to enter a weaker seasonality. So that's why, again, this rally is eventually going to top in this wave 3 of 5, and we'll eventually get that decent pullback. Finally, image number 24, here's IWM small caps. They've been weaker here lately. They continue to struggle with this supply zone. So also notice the 9 kind of pinching with the 20-day moving average there in blue. All right, that does it for the major indexes. Let's move on. Chart 25, here's the VIX daily. Again, was up initially today, pulled back late in the day as the market rallied. Really no changes here. Chart 26, here's the VVIX VIX ratio. Remember, this spiked outside its bands, and it spiked up a little bit today. This is given a warning signal that we're getting close, possibly to some sort of pullback. Again, this is a pretty good indicator when it spikes outside its upper or lower bands, and sometimes it's 2, 3, 4 days early. So definitely something to be aware of here. Next, moving on just to a few of the market sectors here. Chart 27, here's XLK technology. It's going to move similar to the Qs. Again, no changes. We haven't broken any supports. It looks very similar to the Qs, obviously. Chart 28, here's XLC communications sector. We had that breakout to a new high, set up a divergence. This contains a lot of those FANG stocks, so I wouldn't be surprised that this is up tomorrow nicely. Next, chart 29, banks, they're struggling here a little bit. Is a little bit tired looking here with some divergence. So we'll see if this can hold these this 20-day moving average or not. Chart 30, transports, IYT had a bear flag, broke down. Like I said, there's a lot of things under the surface here that are weaker, guys. So if you're just looking at the NASDAQ, a couple of these large cap tech areas, things look strong, but under the surface, there's definitely some weakness here. Chart 31, here's healthcare, another weak sector. It's coiling, but it is, as you can see, it's been downtrending for quite a while. Right now it's in the coil. Chart 32, XLE, energy. Little pullback today, otherwise you can see this kind of possible coil type of pattern that is forming. Next, moving on to the bond market, chart 33, here's high yield corporate. Now, this is starting to show a little weakness. Little pullback here. Remember, this is a leading indicator. This tends to lead. We do have a divergence up here. Now, this lost its 90 MA. It's still holding the 20. Now, if it loses that 20, that'll get my attention. We'll see how this looks tomorrow in the next couple days. Chart 34, here's the 10-year treasury yield. You can see up today. Otherwise, inside day, it's forming a big coil here, though, for the last 3 months. So we'll see which way this ultimately breaks. And anyway, guys, little fun graphic there from Matt's Macro Vision. That was actually sent in by Greg, one of our subscribers. He's that was pretty cool of him. Well, anyway, let's take a look at some of these. So, chart 35, AMD. So, AMD continues to power up. This is also one of my Matt's Macro Visions. I've actually liked AMD for many years, but you can see it continues to power up. And this one doesn't report until next week, though, August 5th. But so far, look at the MACD. Still very healthy on this run. It's had a hell of a run, obviously. And it's essentially doubled from the April lows, but still quite healthy. Chart 37, here's the weekly chart. Again, beautiful buy signal there in April on that RSI trendline break that I pointed out back in April. Remember, guys, on a educational thing, you don't have to just draw trend lines on price. You can draw them on some of these indicators like RSI. If you can draw a well-defined trend line like this, that could be an excellent trigger point, and it was right there in mid-April. Next, chart 38, here's IBLC. I have not really added this to Matt's Macro, but it's kind of an interesting one. This is iShares blockchain, and it's got kind of a, if you look here, it's got a cup and handle potential, like a cup right now, and maybe it's forming a handle. It's kind of a mixture of, let me pull this up here. So it's a mixture of a lot of different stocks. Coinbase, Mara, Core Riot, CLSK, AMD, Nvidia, HUT. So, it's not all AI. Not all crypto. There's a lot of that. There's AI, there's various tech stocks. So, kind of an interesting mix. And it's an ETF, so it's not going to be as volatile as a stock. Next. Image number 33, Platinum. Now, Platinum got absolutely nailed today, down 6.8%. All right. Again, this is one of Matt's macro plays, but as you know, it was very extended. It had a 35% rally out of that coil there in April, May when I talked about it. And I pointed out this clear 5-wave to the upside with clear MACD divergence, RSI divergence. Whenever you can count 5 clear waves and you have that MACD divergence, that's a sign that you're going to get a reversal. Okay. Now, again, guys, I'm long-term super bullish on Platinum, but after 5 waves up in divergence, I needed to take profits. Now, I still have my physical, my bars. I'm not going to sell those, but I actually shorted a little bit of the ETF. Told my subscribers a week ago. I covered it today, and but here's an idealized situation. What we could see, we're initially in a wave A down. Maybe we'll get a bounce here off the 50-day moving average in red, which is coming up. then a bounce, lower high, wave B. I'd expect it to be a lower high. Then yet another sell-off, and maybe we'll end up at one of these fibs. And then I think that'll be a fantastic buying opportunity. Next, Jabber 40, here's platinum on the weekly. Like I said, look how wide that ribbon got. Way, way, way too wide. So we're basically reverting back to the mean. Again, theoretically, this should unfold in some sort of, let me just draw this. I got this nice nifty on-screen drawing tool called Epic Pen. So ideally, we're in this wave A down, get a bounce, lower high, down again, and then that should be your decent buying opportunity, and then we should rally to new highs. At least that's my guess. Okay, next. Trying to get used to this thing. Next. Jabber 41, Remax, the rare earth metals ETF. This was a great trade out of this wedge pattern, but you can see here, nice pullback this week, down 8%. Again, had a hell of a rally out of this wedge, demand zone, but notice it basically pulled back right from this first supply zone. Okay, RSI 14 was overbought, and RSI 14 hadn't been overbought since 2021, as you can see. So now this may also need some sort of ABC pullback. Next, moving on to commodities, Jabber 42, DBC, still up 2.2% this week. Otherwise, it's still in this 2.5+ year channel. Eventually, it's going to get a break from this channel, but right now, still stuck in it. Jabber 43, crude oil, rallied perfectly off of that big base. Nice follow-through move today. Jabber 44, UNG natural gas, down yet again, down another 4%. This has been trending down strongly since March. Jabber 45, copper. Man, guys, look at copper here. Holy cow. 18.2%. Wow. What a dump. Holy cow. I could make a really bad joke. I wish I could have that good a dump in the bathroom. How about that? How about that bad joke? Anyway, man. News trumps the charts. Next, Jabber 46, DBA. That bounce stalled right at the 200-day moving average, underside. Rejected there so far. Next, Bitcoin, Jabber 42. Just chopping around here sideways so far. Otherwise, big support is down here, 112,000 or so. Jabber 48, IBIT, Bitcoin ETF. Still monitoring this as well. Still holding that 20-day moving average for now. Jabber 49, Ethereum. Little pullback today. This kind of has a cup and handle look, sort of. Little divergence here, though, recently. Jabber 50, here's Ethereum ETF, ETHE. Jabber 51, Ethereum on the weekly. Remember, this is also parts of Matt's macro vision. So we got this weekly chart. This upper trend line is resistance. It's possible we could see a pullback into here, into this coil. If we pull back here, maybe something like that. Okay. Another thing that I guess can happen is you break out of the coil, pull back, back test it, and then go. But I do like this longer term because it's in a coil, and anything that's been in a coil consolidating here, it has a bigger potential to move eventually. This is in an entirely different state than what Bitcoin is. As you know, Bitcoin's had a hell of a run during this entire time. I like Ethereum also because it has a lot of other uses that Bitcoin doesn't have. All right, moving on. US dollar up 1% today. Guys, man, my long call played out perfectly. So we pointed out this MACD divergence. We got a rally up. That last rally stalled at the 50-day. We had 3 stalls there. Pull back. I said, guys, it's pulling back, but watch for a higher low. And I pointed out this MACD KISS stochastic oversold setup. I said you could take a long trigger there, put a stop right there, and man, excellent long. It reclaimed the 50-day a few days ago. Big follow through today. I bought UUP call options on this. I should have tried to play US dollars, to be honest. I took some profits today finally. That said, I think this goes quite a bit higher though. I don't think this rally is done. So I pull back here. I think we'll go. You can see how the moving average ribbon hasn't went bullishly stacked yet, but I think it's only a matter of time. Next, image number 53. Here's the dollar daily with the wave count. Steve correctly identified this wave 5 low back in early July, and that was a great call by him. Perfect wave count there. Chart 54, here's UUP. That's the ETF. Again, I went long UUP calls. UUP itself, you got to buy so many damn shares to make any money. You know, if you bought this at, 27.20, it's 27.85. I mean, geez. So that's why I bought the call options. But anyway, still a nice trigger there. Good setup. Precious metals, chart 55, gold. So you can see here gold potentially leaking oil. So this bearish scenario in red may be playing out. Remember, I've been counting that 3,500 move in April as a blow-off move. So while it was technically set up into an ascending triangle here that could have broke out, I've been actually favoring that as a high, and this is looking more like the case, this count in red. Chart 56, GLD gold ETF, you can see breaking this ascending triangle to the downside. So if you were long there, you would have been stopped out today. Chart 57, silver, also pulling back as you'd expect, getting hit. Had a nice MACD divergence up there, losing its 50-day moving average or 20-day moving average today. 50-day is below. Chart 58, here's SLV. That's the tradable ETF. Same analysis applies. And chart 59, GDX. Double top recently. Slight close below the 50-day moving average here. Now we'll see what this looks like tomorrow. All right, following up with some trade ideas, guys. I did not add anything new. I got to get going here tonight. So chart 60, GOS. This was a cup and handle long idea of mine 3 weeks ago. Resistance was $1.55, and this continues to play out. Chart 61, HUBC was a beautiful long of ours back in early July out of this nice base. Popped hard, pulled back. I said to watch for another bounce, and that's what it's been doing. Chart 62, QuantumScape, been a hot stock, and it's coming back to earth as you can see. I talked the other day, I said watch for maybe a bounce at the 20-day. Man, it sliced right through it, down yet again. Now I think it's going to test its 50-day and this demand zone. This is your demand zone down here. Now we had it as a long way back here, but again, if you didn't take profits on that essential quadrupling of price, I mean, what the heck, guys? Now it's coming back to earth, but this is an area now where it may find some support in that demand zone. Chart 63, CATX, this basing idea. This never triggered. But I'm still going to monitor it here because I do like the base. Chart 64, Zeta. Been on the list here for a week or so. Still in this nice coil. Still looks okay. Hasn't triggered, but still looks good. And finally, chart 65, NBR, the one I listed on Monday. Never triggered, pulled back from that 35-30 area. But it still looks okay, guys. So I'm still watching this as a potential long if it can hold this uptrend line. All right, that'll do it. We'll see what happens tomorrow, guys. Quick check on futures. ES futures are up 47, so they've pulled back a few, but again, big deal. NQ futures, NASDAQ 100 futures are up 251. All right, enjoy the rest of your evening. Thanks for all your support. And on YouTube, guys, please like the video, and please make a comment if you have time. That helps, YouTube. That helps push YouTube to push the algorithm. I like to grow the channel a bit. I've been stuck at 43,000 for many months now. So please comment if you can, or share. Try to get some of your peers watching us, and that'll do it. All right, take care.